Hey, thanks everyone for sticking around and listening to the Cerrado story. It's a very, in our opinion, very much underknown and undervalued story in the market. The story itself is we're backed by the team, both on the executive side and on the operational side, that developed the Largo Maracás vanadium mine in Brazil. And up to March of 2020, the team was really moving forward with the Monte do Carmo project in Brazil, which we'll discuss. In March of 2020, we acquired the Sierra Minera Don Nicolas mine in Argentina, and we're now really repositioning that mine and moving it forward as we go forward. So now this is a company that, in our opinion, is very much under the radar screen, started trading back in February of 21. So just what do we have and why is it of interest? In Argentina, which obviously has its issues right now politically, but it is being slowly addressed in our opinion, we have a tremendous land package of roughly 330,000 hectares in the Diezo Massif in Santa Cruz province. So a mining hotspot of Argentina. We're next to Yamana Cerro Moro asset, the Cerro Vanguardia asset, but we have the largest land package outside of the government. Significantly underexplored by previous owners and operators who are not a mining company per se. So right now we have about 1 million ounces there. What we've been able to do at this mine is go from 22,000 ounces a year of underperforming asset to now running at about 50,000 ounces per year, and that's steady state. We're looking to grow that production profile to about 90,000 ounces by the end of 24 through the development of two modest-sized heap leach projects. As the prior operators, again, we're just ignoring the lower grade material that is heap leachable. So we'll talk about the growth profile there. And in Brazil, which is really, I would say, the hidden jewel of the Cerrado story, the Monte do Carmo asset and the Serra Alta deposit within that is about 80,000 hectares in the state of Tocantins, Brazil, very much in a rich farming area, very mechanically inclined, not very, we're not up in the jungle. It's a significant, unique deposit in the sense that most of the gold is free gold. So when we did the initial analysis in the PEA, we're getting about 95% recovery, an extremely low cost sort of operation as a result. So what we have today is about 1.3 million ounces in resource, where we've completed a feasibility study in 2021 that outlined an after-tax NPV of just over $617 million with CapEx of about $125 million to develop that asset. This asset will be an extremely robust asset, especially in the first 5 years where cash costs are expected to be sub $500 per ounce, and really generates an IRR somewhat embarrassingly high of about 95%. So an extremely robust asset in and of itself, but it is the first deposit that we've really been focusing in on. We have numerous other opportunities to continue to grow that asset as we continue to drill outside of the infill drilling program we're currently doing. Just looking at this on a bit of a corporate summary, we're a very tightly held stock. Management and directors own about 40%, so it is a little bit, trading by appointment at this point in time as we continue to get the story out there. We've got a modest following in the market at this point in time. But the key thing to look at is the chart on the top right, where you're starting to see growth from 50,000 ounces, adding the two heap leach plants in Argentina, and hitting about 250,000 ounces would be our target running into 2025 and 2026, and that's to the development of the various assets. Again, looking at the strategy and timelines for the two of them, in Argentina we're looking at developing the heap leach project that has now commenced. So we're at 50,000 ounces currently is our guidance for this year from the typical CIL mill that is running there. That's processing material in that 4 to 4.5 gram per ton range. That will continue. The heap leach pad will now focus in on the material that's 1.5 grams and below. Very good recovery characteristics there. We will then go to develop a second heap leach pad in late 2023 will start, and into 2024 when it starts production. So that will see a nice gradual ramp up from current production rates to roughly 90,000 ounces over the next year and a half. At MDC, as I said, we've completed the PEA, and we'll talk about some of the numbers in a moment. We expect to have an updated 43-101 resource with obviously a higher degree of confidence in those resources to backstop the feasibility study, which we expect to be completed by the end of Q1 23. And based on our current expectations and the feedback we've got from the various authorities, we expect constructions to commence in Brazil as quickly as late Q2, early Q3 of 23, and be in production by the end of 24 and commence our first pour in early 25. So a very rapid growth profile, I think one that's not being recognized in the market. Obviously, perhaps the feasibility study, the PEA was so good, people want to see what the feasibility study actually holds. Very quickly in Brazil, looking at where we are, we're in Tocantins state, as I mentioned. Again, a relatively friendly mining state within Brazil. We're not up in the Amazonian jungle, which is where you can run into resistance. And again, as I said before, having the right team there and on the ground, they live in Brazil, they're all Brazilians per se, they know who to communicate with, having done it before the Largo Maracás mine to bring it through all the way to production. So it's a relatively rapid build out here. We fully recognize that, but again, it's the quality of the asset, the ease of access. We're just an hour away from Palmas. It's very easy road access. We have a main paved road within 2 kilometers of our pit site and things of that nature. So again, everything's playing into our favor from the simple location and local infrastructure to build this. Just looking at some of the numbers from that PEA, and as I said, this is only on the Serra Alta pit, so one of, as I'll show in a following slide, numerous targets we have on this property. So for about 126 million of upfront capex, we're looking at roughly, on average, 130,000 ounces of production per year. It's actually front-end loaded, and that's why the first 5 years are so robust, at more like 150,000 ounces in those initial years, just through the mine sequencing. We get to process some of the higher grade material first, which is obviously beneficial. Average all the sustaining costs over the life of mine in the PEA was a little over $600. Again, those first 5 years, it's probably going to be closer to $430 per ounce based on the PEA numbers. We'll see how that holds up with inflation, obviously. Currently have a mine life of roughly 10 years, but I think as we deliver this feasibility study, we don't see any real numbers changing in terms of the scope and size. But when you look at us relative to our peer group of other development stage assets, with our sort of rate of return, we think we're head and shoulders above some of these other stories in terms of the asset potential, but obviously we're not being recognized currently in the market on a valuation basis. So that's something for us to continue to work on and be recognized in the market. Again, very simply, looking on that potential return on capital invested, we think the Cerrado Gold asset is going to be front and center in this group. Just again, zooming in a little bit on where we are on a property map. The thing of interest is the Cerrado Gold deposit is one of those dots. We have 30 kilometers of known mineralized trends within our 80,000 hectare land package. We have numerous artisanal workings which really help us focus initially on the easy, early stage exploration and when we're just mapping and early stage drilling. So as I said, Cerrado Gold is expected to be the first of many similar sized deposits that are likely to be dotted all over the property as we move forward. We do expect, as we continue to drill out some of these other targets, we'll have more of that hub and spoke operation once the first mine is sort of the anchor for the property. Just a little bit more detail here. We currently have 5 known targets that have names per se. All of those have some level of drilling or indications from the past, but really not that much detail. So we have lots of opportunity to continue to grow beyond Cerrado Gold as we move forward, and that'll be coming once the feasibility is done. We're focused solely on that at the moment. Very limited amount of regional exploration at this time, but that'll be something once we pin down the feasibility at Cerrado Gold. We'll again looking at that more regional exploration to continue to grow. Again, just what we're doing right now, we're doing all the work that's required to deliver that feasibility. The bulk of it is the infill drill program. That's essentially wrapping up as we speak. We should have a new resource out in Q4, as I said, to backstop that feasibility. All the other work, whether it's engineering studies, environmental work, and other studies continue ongoing in the background quite nicely. And to date, we've had no pushback on the environmental side at all. Just a quick timeline on the Gantt chart of how we move forward, pretty much in line with everything I've said here. Again, the key is to get to that start of production in late 24 with the first gold pour expected in Q1 25. In Argentina, switching gears, is our asset Minera Don Nicolas. The key thing here is the location of the asset and the size of the land package. As I said, the previous operators were not miners, so they weren't really focused on growing the resource, really mining it for profit. They were operating it for other reasons within the political climate of Argentina. But we saw this operation as a severely underperforming asset, which is why we acquired it, and we've turned it around and doubled production, really focused on grade over volume and profitability. So we've delivered that. We've rechanged the, I guess, the mining psychology of the team there to focus on that sort of basis. And really going forward now with this new mining credibility of the group, I think we're very comfortable as we continue to grow the production outlook on two phases. I talked about going with the heap leach pads initially. The other thing we expect to do over the next, call it year and a half, is also to start underground. If you look at Cerro Moro, you look at Cerro Vanguardia, both of these operations are probably 70% now underground. The previous operators were not comfortable looking for underground targets. We have no issues with that. We'll continue to explore to depth. So these are just some of the things that we've achieved over the past 2 years at this mine. The key one being increasing the grade from 2 to about 4.5 grams per ton going through the mill. And that's really just focusing on grade control, in-pit grade control more than anything else, better mapping, smaller blocks within the ore resource model, things of that nature. We've sustained throughput at 1,200 tons per day. It's a 1,000 ton per day plant. So again, the team's been able to stabilize that. Gold recoveries have creeped up nicely to about just under 90%. That's more sustainable now. And we brought all the sustaining costs, somewhere down to closer to $1,000 per ounce now as we go forward into next year. And we are targeting it to hit our 50,000 ounce target for this year. It will be a bit Q4 loaded relative to the numbers we've seen to date, so Q4 expected to be a strong production quarter. Just zooming in a little bit on the land package, because this is really what the story at Minera Don Nicolás is. Obviously we have production today, we have growth in production, but this land package is underexplored. It has significant properties next to existing high-quality targets, such as our Michelle project right next to Cerro Vanguardia. Our Chispas project is a long strike from Yamana's Nati discovery, and obviously we have our own land package to continue to develop. So things are happening in Argentina, shall we say, in the sense of everyone's got a lot of trapped pesos. We'll see how that plays out over the next year or so in terms of what these companies do. They're looking at optimizing operations, growing operations, because the inflation rate is 100%, and we'll see what continues to move that project going forward as people look to grow their positions. Again, looking at our asset and why we say it's in its infancy is when we look at Cerro Vanguardia, we look at the Cerro Negro, Cerro Moro, and the growth in resource development. Now these guys obviously are more mining focused. They've been drilling, they continue to explore. That was not done at Minera Don Nicolás. So we have our 1 million ounces today in various categories. We're starting a more rigorous exploration program, which will continue as we go forward. And we expect in all probability to continue to grow that resource base as we move forward, both in high grade, low grade, underground, and open pit. So as we talked about before, the dual production strategy, high-grade material through the mill, lower-grade material to the to the heap leach pads, and that should see our production rates ramp up quite nicely. We're also going to focus in on underground material, as I mentioned before, and this is right under our existing pit. Now, obviously, we can't change the way the pit was dug for the past 5 years, so we're going to go underground. Initially, we'll probably just ramp off the side of the pit, but we know that we're in ore, we're immediately in ore, and we're going to continue to expand that ore package that's underground. Again, this is exactly what happened at Cerro Vanguardia and at Cerro Moro as the properties matured and the design programs continued to look at depth. So just to wrap up here, why look at Cerrado? Why is it, why should people pay attention to it? It really is a very cheap story in our opinion with a very robust production growth profile. We're targeting from 50,000 ounces to 250,000 ounces within the next 5 years. And I think that's pretty much baked into those assets. Given the quality of Monte de Carmo in terms of potential return on investment, we don't see any problem funding that project. And it really is going to be 2 world-class assets over time, in our opinion. Right now, obviously, it's a lot of exploration to bring those resources up. But I think when you look at the land packages that are available there and what's available in the market, I don't think that many groups compare. We're generating cash as we speak. Obviously, it's in Argentina, which has its own issues, but Argentina is now self-funding. It's not needing external funding to support it, so that's a positive. Everything we have corporately is now being used to deliver the feasibility study. And a management team that's done it before at Largo and elsewhere. They've operated the Jacobina mine, went on the operating side and things of this nature, so there's a lot of credibility within the team to continue to develop and operate this mine as we go forward. And we're really just at the beginning of the value creation cycle for Cerrado. So I think as we move forward and we continue to knock down the goalposts that are required to get, investor attention and awareness and confidence, I think we'll achieve that goal within the next couple of years.